My name is 𝐦𝐨𝐫𝐞. I run a company called SolarRays in South Africa. We do energy as a service, installing virtual power plants, monitoring microgrids. So I'm happy to be working with the Project Finance Institute from the UK, talking about microgrids in Africa. It's going to be a webinar around what are some financial implications, financial things you can do, and how to leverage and improve any microgrid transaction. So what am I going to cover? I'm going to cover what is a microgrid, specifically from a project finance perspective. I'm also going to talk about major structures, like how you do your transaction, what major transactional structures we use for transactions above $1 million. So it won't be focused on the very, very small consumer. I'll also then be talking about project finance acceleration documents, which means if you're in the middle of a transaction and maybe you don't know how to contract with the landowner, here's a draft of a document that'll help you accelerate your landowner engagement, maybe a legal document. I'll then talk in conclusion about risk adjustment and mitigation in Africa. This would mean when you're doing a finance project from another country, looking at Africa, what are some risks that you should think of and what can you practically do to overcome this? So let me start with what is a microgrid. A microgrid is a decentralized power source. This means power can be generated at that grid's level. So this could be at the shop level, at the country level. Microgrids tend to create consumers that turn into power producers. So if you had a house, you probably were traditionally a consumer. Now, a microgrid is the technology that enables you to turn into a prosumer from being a consumer. So maybe you'll go to your local store, buy a piece of green equipment, suddenly you're a prosumer. It's that easy. So prosumers are producers plus consumers, which means they often generate their own power. On the right, you'll see a shopping center in Boksburg, Gauteng, South Africa. It's called East Point Shopping Center. There you'll see solar panels looking like a blue grid on top of the parking lot. So that blue grid is not a roof, it is solar panels that are making the whole shopping mall become a microgrid. Hence, microgrids are now embedded in our cities. If you look next to the solar panels, you'll see some trucks and cars. This is how microgrids then enable things like green deliveries, fossil fuel-free deliveries, and other such services. The World Bank estimates that the potential of sub-Saharan Africa contains at least 170 gigawatts in today's terms. This means that current use of this microgrid technology would be able to help Africans move to a sustainable future. When we now look at some transaction structures above $1 million, what happens? Well, I was a conference chairperson at the Electricity Wheeling Conference happening in Cape Town, South Africa. To put this in context, South Africa is the second largest economy in the African continent after Nigeria. So there was an electricity wheeling conference in Cape Town around March, end of Q1 2022. Here we really unpacked how Amazon's solar power farm of at least 5 megawatts was constructed for solar powered data centers across South Africa and Africa. So this is a link between digital and traditional microgrids. What happened there was there was a solar farm built in an open area that was then wheeled using the government's network to the data center facility. Hence, it becomes electricity wheeling because it involves a third party's network. So you can send power from one country or one continent to another one using someone else's infrastructure, similar to the concept in IT. The main issue is that you need to have sustainability principles when you're thinking of microgrids. And if you think along the World Bank's guidelines, you need to have value for money, you need to use your money economically, you need to be transparent with it, and it must be fit for purpose. When we now look at other major structures above $1 million, you get things called infrastructure managers. So some of you might be such managers yourselves. Across Africa, we have a couple billions of dollars of infrastructure management. This is mostly from a company called 𝐬𝐽. On the top right of the screen, you'll see it in a blue circle on its own, AIIM. Now, 𝐬𝐽 has been managing funds in Africa related to microgrids and grid infrastructure for over 20 years. If you look at other people such as AP Moller, such as 𝐦𝐨𝐫𝐞, they've also got a couple funds, more or less a handful, but they haven't invested as much. Nonetheless, they are critical in catalytic finance as well, because not all the products are sold by all the infrastructure and investment advisors. So it's always good to keep your eyes on multiple funders as a fund manager or whoever you may be, because different structures across your value chain will help you execute your project. It is somewhat rare that one funder would cover your whole stack. In terms of other funding structures, we usually use equity and safes. By safes, I mean a simple agreement for future equity. It is kind of like mezzanine finance, but it sits more between debt and traditional equity without the full forward-looking benefits of equity, but with the obligations towards the company of equity. In terms of myself as Sabata, like I said, I run a company called 𝐬𝐬𝐬𝐬. We did our first raise around 2018 with the largest bank in sub-Saharan Africa, and actually in Africa as a whole. We did it with a bank called Standard Bank. And what happened there was they allowed us to have a quasi facility for our microgrids, meaning residential and small commercial. This quasi facility allowed us to install solar panels for homes and small businesses. Beyond this, you would want to install for large businesses and mines. As of this year, we have companies such as Harmony Gold who are installing 30 megawatt microgrids for their mines. So mines are also transitioning to more major structures. Looking back at the bank that we've been familiar with, that Standard Bank, they also work very closely with the Chinese Construction Bank, for those of you who work between UK and Asia. So Standard Bank's structures they look at credit lines under asset finance. They look at credit lines of, let's say you're a small to medium business doing your first microgrid, you could probably look at a credit line of about $5 million. In rands, in South African terms, we call that 100 million rand. We also then have property finance, which would be if you have land ownership, then it could be a 10-year tenure on that bond. These rates then become lower, and some banks, at least in Africa, are transitioning people. So the newest thing is they'll offer a lower facility than one that you currently have so that you can transition into something green that gives you cash flow to pay off your original facility. This bank also currently uses PPAs and leases. So based off of your contract, you can get finance. So if you have the ability to get a deal in Africa and get a power purchase agreement, you have banks across Africa, sub-Saharan Africa, all the way to Egypt. You have banks that will give you a loan on this product. There might be some restrictions. For example, they might not want to have cash obligations. So the size of your microgrid might have to be limited to what wouldn't require any extra cash input. This would mean it would be backed, almost asset backed by its own asset. If we continue, when you look at some of the largest investment managers, you might want to familiarize yourself with them as you start to endeavor now into Africa and develop your own microgrids in Africa. One company to look at is 𝐬𝐻, Africa Infrastructure Investment Managers. They're a part of Old Mutual, which is quite heavy in the UK as well. If you look at Old Mutual, they have over $80 billion of assets under management. Now, this is across different product lines. If you narrow that down to Africa and the alternative investment wing, you're looking at $4.8 billion. And they've also arranged about $3 billion of that themselves. As 𝐬𝐻, they have $2.4 billion under management, and this is across the Western Africa, Northern Africa, the Sahel region that some people call now, and Central Africa and Southern Africa. If you look on your right, you'll see a map of the different places where you can find some of their investments, meaning some of their wind power plants, solar power plants, and hydropower plants. Let's get deeper into structures now. What is the kind of structure that I should use? Let's say I'm trying to teach someone, or let's say I'm finishing up my MBA and I have a big pipeline of opportunity. Well, the most popular one is an SPV, a special purpose vehicle. This is mostly used by banks, investment advisors, and family funds across Africa. If we look at one company that's actually based in the Northern Hemisphere, I believe it's in Norway. If we look at a company called 𝐦𝐨𝐫𝐞, they're a foreign company doing well with local microgrids. So what they use is a special purpose vehicle. And on the bottom left of the screen, you'll see the purple parts mostly looked at by 𝐦𝐨𝐫𝐞, who would be you as the project owner. And then the gray parts would be the support. So if you wanted to launch a project, what these people do, if you want to follow a vaguely similar and very bankable model, you would have a special purpose vehicle that would be owned by yourself along with co-investors. These co-investors might have their own requirements on your project. Please be aware of that. Some co-investors only co-invest at least £100 million. Those are frequent in the United Kingdom. The large co-investors in Africa usually look at £20 million upwards. That would be considered large in Africa. So your special purpose vehicle would have yourself and your equity investor. Now, what 𝐦𝐶𝐻 then does is they take the special purpose vehicle, meaning this new legal entity that's been created and that has no bad records attached to it. They take that new special purpose vehicle and give all the good values to it. They give the land lease agreement, the power purchase agreement, the EPC contract to this special purpose vehicle. Then this special purpose vehicle then subcontracts anything it may need. For example, if they need O&M support, etc. This has been used, for example, by 𝐦𝐶𝐶 across South Africa, Egypt, Mozambique. On the bottom right, you'll see their capacity over 500 megawatts split across countries, but it's really using such strong SPV legal structures. If we look back again at Old Mutual's 𝐬𝐻 fund, well, within 𝐬𝐻, they have the Ideas Fund. This is one of their funds. And this fund is managed by people of multiple races. So it's very balanced at the directors level. And it's also the largest equity investor in the South African area. What this would mean is if you have bid windows and, for example, public tenders, a lot of the equity that is raised includes this company. If you look closely on your screen, there's a detailed list. We have 73 megawatts where they have 10% interest. a 10 megawatt solar facility where they have a 50% interest. They also have interest in tolling facilities. They also have a 25% interest in an 80 megawatt wind farm, a 30% interest in another 17 megawatt wind farm. So they have interest across microgrid assets and across the area. When you think of I would say your models, your first basic model is first principle, future value, present value, 1 plus I to the power n. That'll give you what you're expecting. In terms of South Africa and Africa, the standard would be 7 years, 10 years, and 20 years for the following reasons. A 7-year agreement is popular in the commercial and industrial sector, maximum 10 years in that commercial and industrial sector. So when you're planning your microgrid, and maybe let's say you might be planning carbon credits attached as well, those carbon credits per your ETS, European Trading Scheme, might only be eligible across 7 years. So think of that in terms of the future value. However, we also have things such as warranties. So you might buy a great piece of equipment. For example, the largest solar farm in the world was done by a company called 𝐦𝐨𝐬𝐢𝐈, and they offer 10-year warranty on their inverter, extendable to 20 years. So you might actually qualify for a 20-year sustainable facility, depending on the equipment you use. So your future value is really affected by the analysis and the quality of what you have. So good quality products will give you a good quality structure that probably even gives you more years and more value. Now, to get this impact, we generally use debt for nature swaps. This would basically mean someone such as you who would be structuring this transaction, you would want to facilitate the finance. This means you might talk to some donors, you might talk to some DFIs, meaning you might talk to governments who do help globally, or you might talk to individuals who do help individually. Now, you might want them to disperse a grant to you. For example, my company, when we raised with Standard Bank, we got a portion of grant within it. So it wasn't a single facility, it was a split facility. You might want to do that as well, because it usually creates more, it usually improves the risk profile of a project. For example, you'll have someone providing this, someone providing higher risk debt, and that usually makes a project good. Within that structure, then you would sometimes have the government, depending on the risk profile of the country. And this is where you get your creditors' agreements and your discounted buybacks. And then your tax stream that you look at comes from this. So if you're looking at financing through tax initiatives, you would have the following options. The one option would be straight finance from a rebate that you would acquire locally. So you would look locally, maybe in South Africa or Uganda, what rebates are available, or is there a FIT, a feed-in tariff scheme? If those are available, you might be able to claim on those. If there are carbon markets available, you might be able to claim on the projected sustainable impact. If you look in terms of South Africa again, the latest financial asset we have for these projects, let's say you don't want to use a euro, you don't want to use a rand, you want to use something else that's denominated. You might not even want to use a dollar. You might want to use something else that's denominated. For such a separate denomination, we, in South Africa, in October 2022, crypto was announced as a financial asset. So if you were trying to trade crypto in June in South Africa 2022, it wasn't regulated. Now it's a regulated financial product, which means you now have a third option. So globally, you now have options of trading in crypto as well. As you continue to look globally, we have the most nascent market, which is carbon finance, and this taps into everything sustainable. This is from your solar panels to your wind, basically your entire microgrid. That is the big benefit of microgrids, that you actually have additional bond facilities. Besides traditional finance, maybe project finance or asset-backed finance, you do have sustainable linked finance. we have banks such as Nedbank that launched the first green bond in our continent. Then more recently, we have countries such as Kenya who have opened up for carbon trading, and Egypt. Globally, the carbon finance market, you're looking at about $6 billion. In terms of continent-wise, you're looking everywhere from Australia to Europe to America and to South America. Now, I promised that I would give you some documents if you were in the deal. Let me help you now. Let's say you have a possibility to do a transaction in Central Africa, and you have someone who might run a family fund, but they want to know that what you're going to do will be correct. First thing you do, you go to the top link, UNPRI. It's the Principles for Responsible Investment. There, you'll get some credit ratings of the place you're looking to invest in. You'll get sovereign debt information and ESG investment support, which means by the time you need to structure and pitch, you'll have the basic principles covered from a financial sector perspective. And most probably, these documents will then help you become in line with your local financial sector conduct authority. Secondly, let's say you might want to buy carbon offsets. We know that there are heavy penalties happening currently in the UK for quite a few companies, including Shell and Diageo. Here you would look at IETA for emissions reduction purchase agreements. These are standardized templates. On the second link, these are standardized templates available in Word and PDF that you can then use to write the amount of impact you're doing. So, for example, you would estimate that you're going to save 1 billion tons from the universe. You would then be able to adequately write that into a well-structured document, thus saving you legal fees. Finally, on the third link at the bottom, we have the World Bank. Now, from this perspective, you would definitely be doing a transaction above $1 million, but you most probably will be doing a transaction above $20 million or 20 million pounds. So with this link, you would then be able to access your power purchase agreement. So for example, you had the opportunity to alleviate the energy issues and reduce the poverty between 1,000 people. Those 1,000 people have come together to purchase your power. You need to give them a power purchase agreement. Or you have a multinational that might be listed on the LSE, the London Stock Exchange, and they might have more operations happening maybe in Zambia. Therefore, they would need a power purchase agreement that would relate to Zambia, but also relate to the United Kingdom. For this, a World Bank PPA is ideal because it covers multilateral considerations and it's very standardized. So it won't feel like any one party is getting more of a benefit. Another great benefit of using templates is that you also get your land lease agreement and your implementation agreement, along with your PPP. Now, a PPP is popular in Africa because it's called a private-public partnership, which means should you need to partner with the government, not only use them as an end user in the transaction, but partner with them in other steps of the transaction. This public-private partnership would enable you to do that. An example of that from a project finance perspective would be in South Africa, we have a railway train system called the Gautrain. So it's like the metro in New York. It just has a lower footprint. This train that we now have was funded through a PPP, which means private investors and the government collaborated. Ownership is a collaboration. For a few years, it's going to be owned by this private company. Thereafter, it will be handed over to the government, hence allowing for full financial benefit and asset optimization on the front end, at least for the first 10 years. And then for the remaining 10 years, hopefully all the impacts from the investment will have followed through. So the government should be able to adequately manage their own asset going forward. which then gives you a bunch of sustainability benefits to claim. Climate change risk. Now we're going more into risk. Climate change risk means if you don't have enough water for your hydropower, you're at risk of climate change. If you have too much sun, you're at risk of climate change. All of these can be harnessed and benefited. So these risks are monetized positively. So the climate change risks that I'm going to be talking about now are going to be around the voluntary carbon market. What does that mean? That means if you would like to install a wind farm, maybe floating wind farm, you might be helping the climate. And this is in line with the Paris Accord. Not everyone has mobilized for this. A lot of people are talking about it, but not everyone has mobilized for this. Myself, I'm the only South African that's part of the United Nations SDSN network, Sustainable Development Solutions Network. So I also give global commentary on such prospects. What I would say is about 50% of African companies and 50% of UK companies are adequately addressing their climate change risk, meaning they've described what they want to do by 2030, or they've described what they want to do, period, or they have properly added a metric for what they want to do. So maybe they want to save 5 houses or 5 lives. Now they've added a metric for what that 5 means. So how many dollars or how many pounds per impact? The nice thing about climate change and voluntary markets is that anyone can trade. We've had Alphabet, we've had Stripe doing test trades. Microsoft currently has open contracts for trades. They go on a rolling basis. Just visit their website and send an application. We do have other voluntary markets and other mandatory markets. So let me also touch on that. You might be subject to a mandatory market, meaning you might be a company that currently does something that's quite energy intensive, and that energy you might be getting billed for it. You need to use the energy, and that's fair because you need to help the world. But some of the energy you use might attract a charge, and this becomes a carbon or greenhouse gas surcharge. If you're in Australia, failure to disclose your greenhouse gas emissions is $60 per ton or per megawatt of undisclosed emissions. Around the UK, I believe it's about £80 per ton of undisclosed emissions. And in America, it's between $50 and $150 per megawatt or per ton of undisclosed emissions. So climate change risk is a real risk from a practical perspective because it impacts your triple bottom line. If we now look at some risk adjustment and mitigation measures, we're now tending towards the end of the presentation. Risk adjustment mitigation measures that you would look at in Africa definitely include export risk. So what would this mean? For example, maybe you want to build a microgrid which has the following concept. You wish to have a lot of office blocks have solar power, and all those office blocks that you own in Africa must also have electric vehicles, because in UK, rest in peace, the Queen said electric vehicles are a way to go. And because a lot of countries, including South Africa, are part of the Commonwealth, your EV legislation in the UK allows you to invest directly into South Africa for your EV concept. So on the legislative side, you're great. You have 2 countries, Britain and South Africa, who really want to do electric vehicles. And you have a great idea of merging it with your microgrid. So on a political level, you're great. What other risks do you have? You then have the risk that something might go wrong. There might be political instability. There might be a lack of a payment. This is where you get export risk coverage. So you are taking a risk endeavoring into another place. Your own country will cover you, or the country you are entering might cover you. I know Britain has their own export risk partner. If you were to be in South Africa, for example, your export risk partner would be 𝐸𝐶. So from an African perspective, this is the slide you're currently seeing. 𝐸𝐶 will cover a South African, provided 70% of what they're doing is South African based. They'll cover all of the banking loan risks. So let's say a South African came to the UK and asked for a credit of $5 million for an African project. That project can be covered by local credit insurance. So you do not need to expose yourself to risk at any point. That export risk insurance would cover your bank for up to 100%. It would also then cover your unpaid incomes. So let's say you don't get the revenues from your microgrid, it would cover that. It would even cover 100% of political and commercial risks, provided it's below $20 million. If it's above $20 million, the ratio of risk cover might be less, or you might just need a special structure. The recommended period is 5 years because the estimated time for adequate impact is 5 years. On the right-hand side, we have investment cover. Investment cover would now mean if you're not asking for credit cover, let's say you've already got other aspects of the project tied up, then you would go for investment cover. Please remember, these products are available at your local DFI as well. Meaning if you're from Norway, if you're from Sweden, if you're from Britain, if you're from Australia, if you're from America, if you're from South Africa, if you're from Eastern Africa, and if you're from Northern Africa. We also have the African Development Bank, and we also have the Trans-African infrastructure. So there's a lot of ways you can purchase this. Globally, you would even use MIGA, Multilateral Insurance Guarantees. So you do have many options of how to purchase this, but you need to understand where in your microgrid project finance structure it lies. So when you've identified your shareholders and you've identified your project location, once you've identified those two things, it's time for you to look at your export credit. Once you've identified your shareholders and once you've identified your project location, you need to identify your export credit risk, because beyond the financial value and tax implications, you will have credit risk exposure that'll affect how quickly any of your money can be moving out of any country. So you need to have your credit risk covered. If you look more locally, we have risk adjustment and mitigation. More locally meaning, let's say, on a country level. We have one DFI called DBSA, Development Bank of Southern Africa. They cover a few sub-Saharan African areas. They'll allow you to extend your tenure to 18 years. So maybe you have a project that can financially be bankable up to 10 or 15 years, but you need that extra 3 years for a sort of cushion, or maybe even for your own stress test. Then you would get an extension facility on your existing facility. Hence, you would have a long-dated tenure of up to 18 years. This could alternatively be a lower value facility with just a longer date. How it comes is, it comes as concessional and subordinated debt in DBSA specifically. So globally, for example, in Luxembourg, it's distributed differently. In Luxembourg, you would have a distribution that might be direct or might be covered by your company laws or your partnership laws. In Africa, we have very standardized laws. So you would just look at the local company format and see how much debt that structure can take. Now, what would then happen is your SPV, assuming you do the most bankable structure of an SPV, your SPV would then take on this debt extension. So it wouldn't necessarily force you to have debt on your own books, unless that's the structure of your project for other overall benefits. But should it be a nascent and newly ideated project, you might want to structure a new SPV, and you also might want to attach subordinated debt and get 10-year extensions due to the risk. And because it's ring-fenced as an SPV, it's easier to get approved. When you do not ring-fence your SPV and you ask for 10-year extensions, even from global DFIs, you usually get pushback from potential risk. So if you structure a new SPV, try get a ground partner to help you do it. And that's the key to success in Africa. Try get a ground partner for that success. Get someone who knows what to do, someone who knows where the law office is, where this is, where your client is, where the bank is, who knows the local landscape. It'll help you get your transaction through faster. We have companies such as the Construction Industry Development Board, the Electrical Contractors Association, the South African Facilities Management Association, Energy Storage Association. We have so many institutions and ways you can look for support in Africa. And if you can't find that support, you need to get a ground partner. In summary, and I guess I'll now open up to some questions soon. In summary, microgrids are definitely the future of energy. Microgrids are how you enable yourself to access energy, but also access finance wherever you are, because you get finance across the capital stack. Securitized lending deals do better. That's just true. This is true because on one end, securitized lending gives the second investor more comfort in a nascent market. Maybe you think you're in the bush, like the photo. A secondary lender will help you understand the market requirements and market conditions. Let's say you arrive in this bush and you feel like you now want to put up a microgrid, like you can see in the photo. Then you should look at high risk, high reward. That principle still applies in microgrids. Hence, you're looking at 12% up to 35% annually on a net basis. This means after any costs, structuring costs, transactional costs, and banking costs are accounted for. Thank you very much for your time. I hope you've understood a bit more about what is happening in Africa and sub-Saharan Africa. And I hope that I can help you with your journey around microgrids at any point in time. My name is Sabata, and this was with the Project Finance Institute of the UK. My contact details are here. And if you would feel like joining 𝐦𝐨𝐫𝐬𝐢 on the metaverse, please do scan the QR code. It'll take you straight to a registration page, and we can talk further from there. Thank you very much, and I'm going to hand back to T.